The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You've got half of the Money Masters. You've got the Steve Rhodes side. Tom is not able to be with us this morning. He will be back today from 4 to 6. And, you know, it's Wednesday, already the middle of the week. And got a great lineup today on Mondays, Wednesdays. Oh, you got to love those days. In the on-deck circle, we got Mr. Basil Chapman. He's ready to step on in, and he's ready to hit me over to third base. And then we got Larry Pesavento after that from 12 to 1. Larry is going to knock us in with a homer. David's going to come up, get a double, if you will. He'll be in from 3 to 4. Warming up Tom. And Tom, he's going to round the bases. We're going to go home with a victory today. Of course, we do that each and every day. Thanks so much for joining us right now. You've got the Dow up 38 points, S&P's up 5, Composite up 15, small caps up 4, NDX up 12. We take a look at what's going on inside the NDX 100. You got Apple's up 279, trading out at about 427 and change. Microsoft down only about 9 cents, trading out at 28.16. Google's down $3.80. You've got Amazon up by $2.80. We'll go take a look at that. Take a look at the financials. If I just take a look at the top 25 or so, most of them are in the green. Wells Fargo, J.P. Morgan up about 80 cents. Citicorp up 19 cents. Bank of America. We'll go take a look at Bank of America up 17 cents. You can always give me a call, 877-927-6648. Today's a good day because I could use some co-hosts, somebody to help me help to fill in. So this is co-host day. Give me a call. If we go take a look at the ETFs out there at first, let's go take a look at the Qs. Since I was talking about the Qs out here, we'll go ahead and punch that up on the screen. Take a look at the pattern that's setting up here and what the Qs are doing. The Qs are inside the swing point here from October 27th. The high is 59.20. The Qs right now today have gotten up to 59.07. Looks like they want to at least tag that area. Now, what do you have at 59.20 on that October 27th swing point? You got 104 million shares. We've done 39 minutes of trading. I got to get a little tool up here because my mind is not going to work that fast. You've done 7 million shares, so that would get us in about 75, 80 million shares. How's that for real quick math? See how close I was there. So, if you just simply did the straight line method, which you can't really do because in the first 30 minutes of trading is when you would get, heavier volume in the last 5 minutes, we know. Typically we get some real big volume coming in there. So it's going to need more juice to get up over it. Now, what you'd like to see is it actually get up over it and do this 1.618 expansion of this B to C swing point here. That would also complete, let's see what the A, B, C, D is on this. So you got your A point down here, November 25th, come all the way up to the high on December the 5th, come back down to the December 19th there. You'll see that a 1-to-1 A to B equals C to D completes here at 58.91. So you've done that. You did that yesterday. So you completed that yesterday. Yesterday, the volume that you had was 41 million shares. Again, that 41 going into 104. Well, I can do the math on that. That's like 40% lighter volume, folks. So what you'd like to be able to see if, it depends on which side. If you're like me and you've got the shorts on, and in fact you've already put some shorts on, if you will, what you'd like to see is you'd like to go ahead and see it get up over that swing point on lighter volume, actually get up to 59.68, because then what do you have? And then close back down below it. So I'd love to see it get up to 59.68, then close back inside the range. And when I say that, folks, I'm talking about getting back inside the October 27 swing point. You do all that on lighter volume, then that is what I call textbook. That's what we would be teaching you inside one of the chapters of exactly how to trade, about looking for a trade that is on your side. What else do you have when you get up to 59.68? Well, you just go over to the left side of the chart. What else do you have up over there? You've got the other swing points. You've got the swing points going back from July 26th, the high there, 59.83. That you've only got 40 million shares. You take a look at the day before, you had 48 million shares. And so Now today, so that, and let's see if we're already trading over there. No, you're not trading. You're not trading. So that's where you would really. So you'd love to be able to see. So here's the ideal trade. Doesn't necessarily happen today, but the ideal trade is not only do you get up over October 27th, and not only do you complete this 1.618, but you actually get up over the swing point here going back to July 26th. So you do all that on lighter volume, and the high there is 59.83. So you want to go ahead and write that down in your pad or what have you. See it get up over that, close below on 40 million shares. Ooh, mwah. That's a recipe for success. At least being able to show you where you've got a trade, where you've got patterns that are working for you. And, this market could easily move up into the next new moon cycle, which is coming up on Monday. But you have completed an AB equals CD pattern. So it says be cautious out there. Be very cautious if you're long. Start tightening up those stops. Let's go take a look at some of the other ETFs that are out there. And then we'll take a spin. We haven't taken a spin around the world. I hear somebody saying, show me the money. Is that you, Jerry Maguire? We'll go take a look at the euro out there. If we go take a look at, we didn't look at the small caps on the first hour. So let's go take a look and see what are the small caps doing here. The small caps yesterday got up over the October 27 swing point. October 27th, the high there of 76.97, 129 million shares. Yesterday was the first time that it was able to breach that area. What did it breach it with? If you were, and when I say breaching, I'm talking about you got to go to Hawaii, folks, and watch those whales sit on the back of your deck in Maui. Oh, my goodness, what a good thing. Now, yesterday, let's go back to the small caps, if you will. So you go back to the small caps, the high there, 77.27. It gets up over it, closes back below it. 34 million shares, folks, 34 million shares. If we were going to show you textbook, if you will, textbook tests of swing points where you have a rejection of price and volume, voila. It was just delivered to you on a silver platter, if you will, because you were going into the volume here of 129 million versus, what did I say we did yesterday? Versus 34 million. That's like 30% or something less than that, quite frankly. Less than 30%. Folks, that is sending a signal out to you. Be very cautious. If you caught the first hour I was talking to you, you've got a lot of light volume up here at these tops, at the swing points. Question is this distribution going on, getting ready for a bangaroo on the way down, or is it just building cause? Well, we haven't seen any cause building yet just to simply push us up with any type of volume. That's what you'd need to see to have some type of conviction. The small caps, if they can get up over this area being that October 27th, what you see out here is you see a pattern. You see a Gartley sell pattern with just beautiful sacred geometry. That sacred geometry shows you a 0.786 retracement off of the swing point high coming back here to July of 2011, July 8th specifically. So you've got a 0.786. Look at this here. This is a 0.618 retracement off of that same candle to the high that was made after there was a move down to the high that was made on October 26th. So you got a nice 0.618 out there. What do you have right down here at the bottom? You've got a 0.618 retracement. Look at those beautiful numbers, because we teach you about 618 retracements, 786 retracements, 0.382, and then we teach you about 1.272 expansions, 1.618 expansions. What do you have here going on? You've got a 1.272 expansion off of this B to C point. That's right up here at 79.60. That, folks, that there would be an ideal trade, an ideal trade because you take a look at a trend change, because the volume, because the patterns are setting up, and you'd want to make sure that you have the right money management strategy in place. Well, how do you come up with the right money management strategy? Well, folks, I think it's pretty easy, and you can go over to the homepage of tfn.com. In fact, let's go ahead and do that now, so I can walk you exactly what you should do here. If you're taking a look at, you're going to see the power of position size, and it is the second item down inside the carousel. And when you go through that, there's a training video that shows you how to use a position size calculator. I'm going to go ahead and pull that up here so that you can take a look at that. Let's pull that up next. And that position size calculator is so key to being able to help you understand your trading, understand the volatility. Let's just say that you were going to go ahead and trade the small caps. So let's say we were going to go ahead and let's put together a trade for the IWM specifically. We won't do any of the other double or triple ETFs out there. And this is the position size calculator. This is what you have access to for 30 days, free of charge. So the very first thing that you do is you put in the symbol, in this case here, the IWM. You'd hit search. If you want some additional information on the stock or equity, if you hit that, it'll take you to another page. I won't do that right now. After you hit search, what you're going to do, it's going to populate. It's going to tell you exactly which ETF or stock or symbol it is, just to make sure you've put in the right thing. Now, what it automatically does is it comes down here into this step number 2, the volatility calculation. It automatically populates it with the last 2 weeks of trading sessions. Now, if we go down all the way to the bottom, it will show us this area. And what you're going to see is you've got 9 trading days over the last 2 weeks here. What you will see is it also will let you know if you have gap ups or gap downs. Because when you're taking a look at the true average true range, which is high to low, you want to be able to account for gaps. So whether it's a gap up or it's a gap down. So what the system is doing, it's automatically calculating this, and you want to understand that true range. Why? Because when you enter a trade, folks, what you don't want to do is all of your homework to see those patterns that have set up, because these are patterns that, where you're carrying them out into the future, if you will. And so you don't want to, and you don't have to be exact. We showed you all that wonderful sacred geometry that was out there. That wasn't measured exactly to the penny, if you will. That is right in the range. And so you don't want to be able to set up a trade only to have the average volatility give you the kabam, knock you out of the trade. You don't want to be able to, you don't want to do that. You don't want to do all the work. You don't want to have been going out there fishing, waiting for that fish to come in, and then have too tight of a stop. That's really what I'm talking about when I talk about the average true range, the average volatility. So this system automatically populates that for you, or at least it gives it to you. Even if you didn't use it and you just used it for the quick calculation of understanding the average true range, you should use this. You should use this for 30 days and get your head wrapped around it, because if you ever have experienced getting stopped out too quick, then this is for you. If you have situations where your stops are so wide, then this is for you. Now, what I do is you'll see down here, I automatically populate this with what I call the stop multiplication factor. That, folks, is a 1.618. That is a Fibonacci number. In these volatile markets, what I don't want to do when I'm trading is I don't want to set my stop at what the average true range is, because that's average, right? That's average for the days. I want to be able to set it some place out of that. Well, for me, the logical areas are use those Fibonacci expansion numbers. You can use 1.272. You can use 1.618 in a really volatile market. And I believe we're in a very volatile market. That's when you want to use the larger expansion numbers. So that's why I use 1.618. So if we go back to the small caps here, we'll pull this back up. We've got only a couple of seconds here. So, I want to continue to set up the trade so you can see this work. So our entry point here to go short would be 79.60. Let's say that is the pattern that we're playing out here. So I'm going to pull this back up, and we'll complete this when we come back from our break here. And you can always give me a call. You can ask me questions about this at 877-927-6648. Would love to hear from you. We can take a look at your stock. We can go ahead and actually set up a trade on your specific stock if you would like as well. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien and host of the Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. I am half of the show. Tom is not able to join us this morning, and thanks so much for you joining us. 877-927-6648. That's the number to call in if you want to join me as one of the co-hosts. You got the Dow up about 65 points right now. S&P's up 7, Composite up 20, and what we're doing is we're setting up a trade. We're setting up a trade with using the position size calculator, which is a tool that you've got access to. If you go over to the homepage of TFNN, you'll see it as the second item down on the carousel. You can have that tool for free for 30 days. There's so much information that's contained in there that will absolutely help you with your trading. So we're taking a look here at the small caps. We're looking at the IWM. So I'm going to go ahead and we'll set the entire trade up, because what we're taking a look at here is a leading indicator pattern, if you will. We're taking a look at what could be a Tiger Gartley sell pattern, which you can find on page 222 of the Art of Timing the Trade book, Tom's book. And so what you've got here is we can see our entry price to go short here. So this is where we would be selling the IWM. We'd be doing that at 79.60. All right. And we took a look at all of our beautiful geometry. Now let's take a look at our exits, because one of our exits is automatically going to be calculated for us on using the position size calculator. And that's going to be our stop, automatically going to be calculated for us, or at least suggested to us. So where is the other exit? Let's take a look at the full pattern here, because when you enter a trade, when you actually own shares, what you should have is not only the stop in place, but you should have your exit in place where it is that's your target, where you would take a profit. You may not be near your computer or what have you, and you don't need to be near your computer. The thing is, we can set these trades up, and you can go about your day. You can start using the tools that I teach you in Pathways to Growth, the webinar that we're going to be doing next Wednesday night, because I'm going to teach you how to double your business. Wouldn't you like to do that, folks? Now, let's continue to set up this trade right here. And normal, because you know that we take a look at this wonderful sacred geometry. So the normal pullback on this pattern here would be the 0.618 area. The first spot, if you will, on the elevator is going to be at 72.19. That's the 0.382 area. I would expect it would come down there. Then it would maybe test it, move back up, and then come on back down to the 0.618 area. Well, you can see 618 happens to be 67.57, 67.60, let's just say. Let's round it. What else do you have down there? You've got that November 25th swing point. Now, you've only got 28 million shares there, and so you would be at this pattern here, if this works out, and this is a successful Tiger-Gartley sell pattern. Then, as you come into that swing point, you're going to want to be paying attention. Are you coming in there with more than 28 million shares? Because if you are, then what you're going to maybe do is you're going to adjust your stops. But let's not add more components to this, but I did want to just simply point that out to you. So we know that we're going to go ahead, we're going to exit at 67.60, just a couple of pennies above the 0.618 that shows up there, and just slightly, and it's still inside the November 25th high. November 25th high was 68.04, so it would penetrate and come on down in there. So now let's go back over to our position size calculator. Let's go ahead and finish off this trade here now that we have our points of information. So you input the symbol, you hit search, it tells you got the Russell 2000. Then what you're going to do is you're going to come down here and you're going to indicate, is this a stock, is this an ETF, or a sub-index? In this case here, it's an index ETF, the IWM. And then the question is, are you going long or short? Well, in this case here, instead of using an inverse ETF, we're just going to sell the IWM. So we would select bear short. And then you put in your capital. It doesn't matter whether it's $5,000, $10,000, $50,000, $1 million. You put in whatever it is that you have. I'm just simply going to put in $100,000 here. We've got 10 grand here. That's what we're got 10 grand in trading capital. Now, this here is really critical. This is 1%. I asked earlier, how do you know how to put together a trade and what your risk should be? This is defined. And what you want to do is you don't need to risk more than 1% on any one trade. And when you risk 1% of $10,000, that would be 100, right? You can, that's all that you need to risk. And in this case here, so you can risk less, but you don't need to risk more than that. So in this case here, we've got 1% that we're going to risk. We know that our entry point, we said, was going to be at about the 79.60. That's where we had all that nice sacred geometry. And our exit point, we're going to be looking at that 0.618, 67.60. All I have to do here is hit the calculate button, and then it'll give you all of the information. Now, what this does is it tells me that the portfolio allocation is greater than 40%. So that was just, it's a piece of information up there to let you know that if you bought the number of shares that this suggests that you should buy, and this suggests here that you would buy, here's our position size, 57 shares for every $10,000 that you have, that if you do that, based on the price you're paying, you're going to need 46% of your total capital. Does that make sense to you? Because that's the 57 shares times the per share price, if you will. And I suggest that you don't put more than 40% in any one ETF. But this gives you the entire piece of information, tells you reward to risk 6.87. Check it out, folks. Go to the homepage at TFNN. You will not be sorry. You will be a happy camper. We'll be right back, folks. Dow's up 68.
As well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
Don't miss out on this great offer. Act now.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Attention business owners, managers, and entrepreneurs. Studies show that 1 in 25 businesses last 10 years and less than 1% of all businesses generate $5 million in annual revenues. Would you like to learn the skills that separate these businesses from all of the rest? It isn't about working 10 times harder. It's about working 10 times smarter. And I can show you how. Absolutely free, no strings attached. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, past owner of businesses at Disney, Universal Studios, Vegas casinos, and top destinations throughout the world. Join me Wednesday, January 25th at 6:30 p.m. for a 1-hour online webinar where I'll teach you how to get your dream clients, get past the one person that stands between you and the most influential people in the world, and show you the 3 ways to grow your business exponentially. Go to the front page of TFNN.com under Breaking News and click on Pathways to Growth, where preparation meets opportunity. That's Wednesday, January 25th. Register now for your Pathway to Growth, part of our Go Long America program on the homepage of TFNN.com. Decisions shape your...
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. I am co-host, half of the show, if you will, of the Money Masters. Thanks so much for joining us. And we're taking a look at right now. First, you got the Dow is up 68 points, 69 points. S&P's up 8. Composite up 23, and had a request to take a look at AEM. So we're taking a look at AEM. I don't know what the request was for. Maybe somebody in the den who requested it. Are you looking to go long? I would imagine so. And we'll take a look at AEM. The first thing that you're going to notice here when you take a look at this chart, the very first thing that should stick out to you when you take a look at any chart is the volume. You know, in this case here, when you take a look at AEM, you've got a candle, you've got a volume candle that just simply stands out like a sore thumb, if you will. And you're looking at, that's the October 19th candle where it gapped down on 13 million shares. Gapping down, folks, when you're gapping down with a volume candle like that, that is saying, you know, be out of Dodge or be out of that stock because there's more damage to come. Now, what we're also taking a look at is we're taking a look at a larger A to B equals C to D pattern. And I talked to you about understanding the importance of, especially on that C to D leg, whether the market's going up or the market's going down, is, are you on the inside or the outside of that leg? Is your move on the C to D leg stronger than the A to B leg, or is it weaker? Very important, because it'll help you to understand whether you're going to do just a 1-to-1 A to B equals C to D, or more than a 1-to-1 A to B equals C to D. When you start gapping down into the actual D point, and what we're talking about here, folks, so your A point starts out here on AEM, out on the December 8th time frame, high out there of 84.45. There might be another. It's right in that range. It's one of those dates right in there. And so that's your A point. Your B point comes down here $33 later into the time frame of August of 2011. You make your C point. Now, here's another thing that you want to take a look at, right? It's those retracements that you do. If we go down and we take a look at our retracement from A to B and see what retracement level we did on the C point, well, it looks to me like it's going to be above a 0.382. So it's between 0.382. Didn't make it all the way back up to 0.618, but got pretty darn close. Okay, so that was the retracement that it did. Now when we take a look at A to B equals C to D, well, as you started your way down on the C to D, you had a gap, right? You can see that gap right in here. A gap is where you have a void of price. It's where you wake up one morning, you go to bed, or you go to bed the night before. In this case here was September the 22nd, and you went to bed with AEM, and you said, not too bad, the stock is trading out at 68.21, and then, of course, you wake up the next day, and it opens up at $64. You lost $4 like that overnight. That's about, 8% or so, just like that. Hey, how would you like to be? Look at the second gap here as it's completing its C to D, as it's coming down in there. Here, you went to bed, and you said, okay, no, not too much, I can handle this. You went to bed on October the 18th. It closed out at 57.10. You woke up the next morning, and you didn't realize, but all of your neighbors and all of your friends decided to sell, 13 million of them, and it opened up the next day down at $48. 48 versus, what did I say you went to sleep on? You went to sleep on $57. That's a little stinger there. That is about 14 or 15%. So that's why you want to be able to use stops. It's why you want to have the position size calculator. If you're struggling to identify stops, then that's going to be a real tool for you if you're getting stopped out too early. And folks, you can use that position size calculator. You can go in there and if you follow somebody's trading newsletter, you can use the exact stop that they give you. You don't have to use what the position size calculator provides. That will still tell you how many shares of that stock. And you want to round it up or round it down. And if you, in some cases, maybe you're only taking a half a position or a quarter of a position, you just put 0.25 or 0.5 in there. So we can see here on the C to D leg of AEM how you are much stronger, how you had a couple of gaps. You've had more than two gaps. This thing is Gap City on the way down. Where does it stop at? You got to love this, because the 0.618 is at 35.62. You're trading right now at 35.94. So it gets back to the area where it should stop, which is the 0.618. So that's why we want you to be able to. That's why when we take a look at that IWM trade, so if that butterfly, that was a Gartley pattern we were looking at, if that Gartley pattern completes, that's why when I measured the A to D point, if you will, that the 0.618 was a logical exit for us. And you want to always be able to, as I say, set up the entire trade. Most folks will spend time just focused on where they enter the stock and try to get that right. Folks, that is a real small portion of the trade. Yes, you want to be able to understand where it is you enter and the reasons why, and you want to make sure you've got strong reasons why. If you don't have strong reasons why, if you don't have conviction, look for another trade. It works that way in life. It should work that way in trading. But if you do have conviction behind it, then you want to set up the other two sides of the trade, at least the other two exits, your stop and where your exit would be if you're not near your system, so that it goes ahead and it pays you and it puts money, and you start creating your forest of money trees out here. Well, AEM, I would not be getting in this stock here. I would be waiting for some type of sign of strength before you could get in that. And a sign of strength, folks, would be where you see wide price spread and volume coming into the equity. You want to see what a sign of strength looks like? Maybe I should show you what a sign of strength looks like. Let's go take a look at one of the stocks that my clients and I bought. We bought this. We were doing this during the accumulation phase. The stock here is Born. BORN is the symbol. This thing has got signs of strength, and this thing has volume at its highs. This is really, from a charting standpoint, this is a beautiful thing. And we had just a beautiful sign of strength come in here on the most recent one is January the 11th. You can see how the stock gaps up, and it gaps up with, in this case here, almost 1.4 million shares. Follows through the second day with 1.3 million shares here. This is a sign of strength. Now, on this stock here, what you would be looking for is you'd want to be able to buy this on a retracement. In this case here, the retracement could come all the way back. It could complete. This is the first gap that is on this stock. So the question is going to be, is it going to go ahead and pull back and close that gap during this next session, or is it really, because it's trading inside this swing point here from October 31st, which has 542,000 shares, is it going to at least get up there and test that? So this is a sign of strength. I don't want to dissect this stock right now, but if you this is what you would be looking for, something like this in AM. It might not be this exact type sign of strength, but then what you want to do is you want to buy it on a light volume pullback. So that was on AEM. If we go just kind of tour around, let's go take a look at Apple. I have not looked at Apple for a couple of days. AAPL. Let's pull up the symbol on this, see what Apple is doing, because we were taking a look at Apple, and Apple is still just making its move, coming back here to the swing point from October 17th. Apple had 24 million shares. We are up over it. Let's see, the high on that, 426.70, trading out at 427.60. Yesterday, let's see, as you were coming into the area, you were coming in on the 17th with 8.6 million shares versus 24. Ooh, there is no volume here at the top. Today, you've done 3.6 million shares. Well, that's not too bad. 3.6 million shares, an hour and 15 minutes into it. So that's got about 20 million shares on just a straight line basis, if you will. That's what you want to be able to see, is some real volume coming into this stock. Because Apple broke this, you should take a look at this pattern here. I'll go ahead and blow it up for you. Because Apple was able to break through this, I think this was a Gartley pattern. Because Apple was able to break through this Gartley cell, this was a 0.786 Gartley cell. What that suggests, your first stop is going to be the move coming up here. But it looks like Apple could really go on and create a butterfly pattern. Oftentimes, when you break a 0.786 Gartley, what you're going to do is you're then going to go do a butterfly. A butterfly in Apple will take you all the way up to the 443 level. I could draw that in here for you so you see what that actually looks like. And this here, folks, this would be, what I would call a leading indicator. By being able to draw these patterns in, know where the stock would go. That way, depending on whether you're long or short, if you were short for some reason, you were playing the short on Apple, and you get a close above the 426.70 with more than 24 million shares, I'm telling you that it's going to 444. That is the most next logical spot. And so no reason for you to ride that dog any further. And if you're long and you get above this area here, then you can start moving your stops up, if you will, depending on where you were at, depending on how you're trading this, whether it's a trade or an investment. And then once you get up into this 444 area, you might want to lighten the load a little bit or start moving your stop up a bit, or at least stop up on a portion of your trade. So that is Apple. Let's take a quick peek at Microsoft, because Microsoft had some signs of strength in it. MSFT is the symbol on that. Looks like I didn't type it in. It would help me if I would type that in. So if we take a look at Microsoft, we punch that up on the screen, and you can see here, here's Microsoft. Here's where you see a sign of strength. You go back all the way to December 30th. And December 30th, you come back in from the new year, and on January 3rd, what does Microsoft do? Gaps up, which is a hard thing for Microsoft to do, but gaps up 64 million shares. And you can see the session before you had 27 million shares. And you continue to not gap up, but you continue to see signs of strength coming into the stock. Right now, the last sign of strength that you had in here was from the this candle right here, which was on January the 6th, 99 million shares. So here on Microsoft, if you'd like to be long in the stock, you'd like to see it pull back into the breakout area, which could either close the gap, which would get you down to the 26.12 area. I suspect that that's what Microsoft would do. If we take a look at Microsoft, we just look at a retracement level, and you want to see it start pulling back on lighter volume, or whenever it decides to pull back, you want to see it pull back on lighter volume. You just take a look at the normal retracements from low to high, and what you can see is the 0.618 area happens to come right in, and it would close the gap. That's what would be a normal retracement for Microsoft. So right now trading out at 28.13. There would be nothing wrong with this stock coming in and closing the gap and coming back to that 0.618. In fact, it would be setting up, if you're taking a look at quality volume, it would be setting up an A to B equals CD. That would be beautiful. Let's go take a look at, how about in the financials, Goldman Sachs. They released numbers today. We take a look at Goldman Sachs out here. Goldman Sachs trading up at 102.77. It is up $5 today. You've got some volume behind it because we only have, as I say, an hour and 45 minutes into trading. You've got 7 million shares. That is going into this swing point right here that only has 10 million shares from December the 7th. So you've got some, you've got some strength coming in here as far as a retracement. What it looks like Goldman Sachs wants to do is at least get up into the high on that swing point. That is the high would be 106.10. At 106.10 is where Goldman Sachs would be releasing the next piece of information to us. Let's see, what else? We got MasterCard. I think I had MasterCard in the first show. So let's go take a look at, with regard to what's not hot. Let's take a look at Sunoco. SUN is the symbol on that. I saw that had gapped down this morning, trading out at 36.73. So you've got something, in essence, that fell out of bed, if you will. When you went to sleep last night, if you owned Sunoco, you went to sleep and the close was at $42.31. When you opened your eyes this morning, you got out of bed. Sunoco decided to open up at $36.73, $3. So you had about just on about an 8% or so move down. Ooh, those are painful, right? You got to like to have 8% moves up, if you will. Now, where is this thing going to? Where does this thing? So one of the things that you can see that it does. We talk about closing gaps, right? Where does Sunoco move down to? You can see it had an open gap here going from November the 25th all the way up here into the November 28th after that weekend. So this was coming back from Thanksgiving. Everybody on Sunoco had eaten all their turkey, decided they were back in shape, and they were ready to punch up. It gaps up. All that Sunoco has done so far has closed that gap. Of course, now what do you have? You got a big, huge open window here. I am not suggesting that you go in and take on Sunoco today. You're gap down. You've got 1.6 million shares. You're coming into, let's see, you are below. Are you below this? Yeah, you're still below the breakout. That breakout only had 2.8 million shares. So that is saying, okay, be careful. It is broken. I guess if you're going to say this is your A to B point, it's broken a swing point. Bottom line is Sunoco right now is broken a swing point. The swing point being the swing point from December 14th, which had 2.5 million shares. So you're breaking that swing point on volume. Looks like Sunoco wants to, let's see what else. We got a high volume out here. So this is what's holding it in its tracks right now. This high volume bar from September the 6th. Where you had 9.6 million shares. So that fund in there right now looks to be supporting it, looks to be buying it, but I would not get in front of this train. That was Sunoco. Let's go take a look at, let's go back and take a look at MasterCard, just in case I didn't pull that up. I don't remember why I had that up on my screen here. Take a look at MasterCard. Oh, MasterCard. We were taking a look at MasterCard. That's right. Before the break, going into the opening show at 9 o'clock, I was showing how MasterCard had made an A to B equals CD down and did a 1 to 1.618, AB equals CD. Now, when you cross the B point on this, the B point is December 19th, had 1 million shares. As you came through that swing point, you came through it with 1.4 million shares. Then the next day, 2 million shares. So that immediately was telling you, that you were going to be doing more than a 1 to 1, A to B equals C to D. And all you had to do, and it's so important to be able to take a look at these high volume candles out here. If you go to the candle from September 16th, what you will see is what MasterCard did was came right down. The bottom of that candle on September 16th is 338.19. MasterCard got right down there, rejected it, is moving higher now, but not doing it on volume just yet. 877-927-6648. Dow's up 53. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. 877-927-6648. Let's go to Kurt in New York. Kurt, thanks for calling. Thanks for holding.
Well, good morning, and I want to say you're having a great show, and you always have a great show, and very inspirational to me. I know that. And
well, thank you.
Right, and every morning you talk about us taking in charge of our own income and everything, and we do have the time to do it, but sometimes we just don't want to put that time in.
Well, I really appreciate you listening. I appreciate your comments very much. It means a lot to me. Thank you so much.
Well, thank you.
Yes.
I'm looking at QID. I'm the type of guy that likes to, when the knife is falling, I like to look the other way. You know what I mean?
Okay. All right. And so when you take a look at QID, that is the inverse, folks, of going short the Qs. And so what I've got up on the screen here is the actual Qs chart. And so what I would do is I would wait right now to get a confirmation of some information, which would be wait for the Qs to at least test the high of the swing point from October 27th. So, Kurt, you're looking for the test of at least 59.20. The Qs have 104 million shares. Right now, you're trading out at 59.15. Let's see, you got up to 59.18. So 59.18, what did I say? It was 59.20? So we should get that test today. And what you want to see today is then you'd want to see it close back inside that swing point. Okay? And you want to see it do it on less than 104 million shares. So what we've got is, and you've got time, you can be patient on this one here. Mm-hmm. You've got 12 million shares. We've got an hour and a half worth of trading, so it's not going to have the volume unless some major volume comes in at the end of the day. The price that I would look for, I would like to see it hit 59.68 because it's a 1.618. I'm looking at the Qs because you want to be able to place your trade based on the Qs here, okay?
Okay.
And so you want it to, what you'd really like to see is like to get to 59.68. If it gets up there, don't sweat it out. That's really what you'd be looking for. That would be a 1.618 expansion of your B to C swing point. And then you want to see it get back inside the October 27th there. You want to see it close underneath 59.20. And if you do that, and you do that with 104 million, less than 104 million shares, then you want to go ahead and take a look at the QID. Now, if we go ahead and we pull up the QID, so now that we've set that piece of the trade up here, we pull up the QID. The QID is trading out at 40.16 right now. So you'd be entering somewhere less than 40.16. And if we just simply pull up the position size tool, that way I can give you just another piece of information here. So we'll see what the average true range is on the QID here. And on the QID, let's take a look at this. We'll hit the old search button. And so the QID is going to show us that the average true range, that's the daily volatility, is 83 cents. So your stop, wherever it is that you would enter. So you're going to enter based on the Qs, okay? And when you see that target, when you see that close back below, the October 27th swing point, then you go ahead and pull the trigger. Your stop needs to be $1.75 below where you enter the QID.
Gotcha.
Okay? That's going to be your stop. Now, I don't want you to risk more than 1% of whatever your trading capital is. So
I understand.
So what you do, take whatever your trading capital is, either if you don't use the position size calculator, take 1% of your trading capital, whatever that is, and divide that by $1.75 because that's your stock. That's your stop, and that'll tell you how many shares that you should buy of the QID.
Okay.
All righty?
Very good. Yes, sir.
Okay. Hey, have a nice afternoon and a great morning. Thanks for listening in, and stay warm up there. Folks, thanks for tuning in today. You got Basil Chapman. He is coming up next. We're going to go ride that Chapman wave. The best time to go over to the North Shore, if you are in Honolulu, is right now. The waves in January, that's when you want to go ride that bonsai pipeline, folks. Thanks for being here. Live with gratitude. I will see you tomorrow morning, 9 a.m. And all my clients, I'll see you at 3 o'clock this afternoon. Take care, folks.